Howdy, boys and girls. Welcome to another Sunday Sync. We've got Steven and Rhea online so far. So we were just talking to Rhea before the recording, and Rhea's got a couple paid off properties and then a property in California. And then Steven, I haven't heard his story yet. So, Steven, what's your story?
Well, hey everybody. I'm a out-of-state investor all the way up in Canada here.
Oh, nice.
Pacific, it's Calgary, Alberta. I don't know if anyone's heard about Banff. I'm an hour and a half away from Banff. If you're familiar with that, Jared.
I've heard of it. I've only been to Vancouver, BC. I haven't been to Banff, but I just about 3 weeks ago that came up at work of all
Yeah.
places. I work at Intel and somebody was talking about that. I was like, I caught my eye because it was a weird name.
Yeah.
Like bam. Sounds like something out of like the Flintstones. Bam.
It's it, it's incredible, man. Like if you ever see like it's one of those pictures you see on like, those calendars where it's like the bright blue lake and it's like this overlooking like this big mountain. It's
Nice.
quite nice. But yeah, no, I'm 23 years old. I'm a barber out in Calgary, Alberta, Canada, and I saved up quite a bit of capital. And I came across a book called Rich Dad Poor Dad, and I was like, cash flow, right? And yeah, no, cash flow can kind of replace my income in the future, and I can kind of live off of it. So here I am now trying to find my first single family home rental, and yeah, found you guys through Lindsay off of Rookie Podcast. So
Oh yeah, man. She's a beast. She's great. I mean, like she's tough, man. I like her a lot. Yeah,
yeah.
she's in a lot of the communities. Hey, when you said you're a barber, are you running your own barber or are you working underneath like a business?
I'm working underneath the business, so how it works is kind of like a commission-based shop. I
Hmm.
the boss gets a portion, I take a portion, and I take home all of the tips that I make, right? And then yeah, no, just being frugal for the last year and a half, 2 years, and saved up some capital. I'm like, yeah, well, my market is too out of reach now. Homes out here are
Yeah, yeah.
it's like $600,000 for a home, and it just doesn't make sense with any of the numbers and the cash flow. And for me to make something cash flow is like I gotta put down like $300,000, and
Yeah, yeah.
yeah, it doesn't make sense.
Well,
Yeah,
you've got a leg up, I think, on the business front, like, as far as operating in a business-like environment, because when you get into real estate, that's the piece that a lot of people miss,
yeah,
right? Like, and it can be a little daunting on that side of the house, like keeping good books and
mhm.
running the business and all that. That's something people sometimes don't think about. So you kind of got a leg up on that. So great job. I was one of those people, by the way.
Yeah.
I was in corporate or am in corporate for like
Mhm.
25 years because I'm old. And that piece kind of hit me, right? I was like, even though I've managed millions in the on corporate side, but it's not the same. And getting into the nitty gritty and QuickBooks or whatever software you want to use or spreadsheets or whatever, man, it's a lot of time. And I've found all the good people in the service side, like cleaning ladies. I've been to 4 or 5 of those and a couple
Nice.
accountants. But this year I had to fire my bookkeeper again and my accountant again. So I'm
Huh?
moving on to an EA. I'm looking for a bookkeeper. But yeah,
No.
it's tough. But
You
cool,
want
man.
to play games
Welcome.
already? I thought we come here to skate.
Hey, Tiffany, I'm gonna go ahead and mute you there real quick. So unmute if you want something.
Yeah.
Okay, cool.
Awesome.
Yeah, we've got quite a few people that joined, looks like. So yeah, this is sort of an open. I know some of the other accountability groups are like Max on Mondays. If you want like straight up accountability and very regimented, Max is your guy.
Yeah.
Uh, Me, I'm a duct tape and bubble gum, very loose, whatever people want to talk about kind of thing, and I just let it flow where people want it to flow. Some people like that, some people don't, but it gives the variety out of the, I don't know, 6 accountability groups we have. And then me personally, I objectively, and this is going to be a knock on myself. I like Frank's Wednesdays accountability group. I mean, I know that puts a negative spin on me, but or us or this Sunday group. But timing is also a thing too. So, but yeah, Frank is fantastic. If you guys haven't been to the Wednesday one at 6 at
Yeah.
Pacific, oh man, but they go really long. But that you can learn a lot from that. So if Jim joins, Jim's our local contractor guy. And
Mhm.
in the Wednesday one, Frank is the contractor guy. So if you have like physical contract stuff, like advice on products and things like that. Jim's been through the ringer for a couple decades. Frank's done it for a couple decades. So those guys really know what they're talking about. Um,
Yeah.
anyway, Yeah.
I was actually on that the early morning live Q&A with Zuber and Adrian, and I saw Jim was actually pretty active in their conversation. So
Yeah.
yeah, he sounds pretty
Yeah.
knowledgeable his stuff
Yeah.
there.
He's great. I have a W-2, so I do what I can, and that's why Sundays are the only days I can, do this. But I try to be active on the forums and whatnot. But admittedly, since I went back to work, I'm not that active on there anymore. I mean, I try to be, but I
Mm,
do what I can. But
yeah.
yeah, so we just open it up to whatever topics people want to. Oh, speak of the devil, there's Jim. I think that's the grumpy Jim. I don't know. Yeah, there he is. Hey, Jim, we were just talking about you.
Okay, what's up?
What'd you do to your shoulder, man?
It's been jacking with me for about 3 weeks now.
Oh, that sucks, man.
About 12, 1 o'clock, it just gets to where it feels like it's going to fall off.
Oh, man.
So,
I
wait and
did that
see.
back in the day, and they gave me a cortisone shot, and that got me through like 5 months or so, and then it was still an issue. So I don't think it really fixed it. It just got me through.
Yeah, it's definitely a nerve pinch or something somewhere because it's sending pain and tingling down my whole arm.
You know, this is totally off real estate topic, but I had some issues with my knees and things like that, and I went to all these different doctors, and finally I went to a physical therapist, and they knew more than the doctors did, like
Yeah.
by far. And within like 4 or 5 months, I was feeling better, and and then now I have no issues. So I don't know, man. I don't put a lot of stock. The doctors, they know the books and they know this and that, but the physical therapists, they work with people. They see what works, that kind of thing. So I'm a big fan of physical therapy. I know a lot aren't, but
Yeah, they've actually referred me out to that, and I'm going to go get an x-ray.
yeah, because like
So,
my wife, she won't do physical therapy. And I'm like, and I've tore myself, I've tore my patellar tendon. I destroyed my left ankle. My left ankle's fake. I've got, stainless steel and I had a microfracture surgery, all that stuff. But the physical therapists are the ones that got me through. So well, good luck, man.
What's
yeah,
going on,
it's-
everybody? Hey,
Hey,
everyone.
how's it going?
I'm new to Skool. I'm new to the channel. In a nutshell, I've been selling real estate for the past 11 years. I've been full time. I'm actually a 1099 guy. And a few years back, when I transitioned into focusing more on the multifamily side, I started thinking to myself that I've helped a few hundred people buy and sell properties, but I don't have any investments for myself. And I think if I really take an honest stab at it, it was more of like a risk averse thing. And, I'm the type of guy, who had the fluctuating income like a roller coaster being in my own business. And I think I was worried that that if I were to invest in something, especially when the kids started coming along and my wife stopped working, that I would need to keep this capital for that reason. And I think it was a limited mindset that I had. I started getting on the phones more, pounding those phones, and built up a very small rental property portfolio. And I've been listening to Zuber for the past 6 months, and I feel like I've gotten so much knowledge. I came into the group thinking like, oh yeah, like this is what I do for a living. Like I know more than most people, and I get another limited mindset. And then when I started listening to these folks with W-2 jobs, and I'm learning from them, I really checked my ego, had some humble pie, and I thought, man, I should really join the Skool and start communicating with these guys and gals who've been doing this, a lot longer than me at some points. And there's a lot for me to learn. So I jumped in about a week ago. I started this inaugural class that we're going to have on Thursdays for multifamily investing. And I really appreciate the community. I'm here to contribute as much as I can and learn at the same time.
Awesome, man. Yeah, well, welcome. Yeah, I really like this community. I'll say this real quick. I've spent about 15 grand and other things, and I know Jim's done a lot of this too. And then what do? I end up spending all my time in the ORAC community,
yeah.
which is basically like, the Skool part's $20 a month. So that tells you, at least for me, how valuable I think this community is. And a good part of that is the people in this community. I know I'm blowing it up, but they're real. They're real people. Those other groups that I'm in with like 10,000, 18,000 people, they're good, but a lot of people in those communities are not action takers, and they're there to learn, and that's great. But you learn from a percentage of them, but then also the group itself is about making money for whoever ran the group, or they're trying to sell you something. And this group is none of that. It's just straight up. I mean, it's awesome. So anyway, I'll just leave it at that. So
You know what?
You said you're moving to Folsom?
Yeah, yeah, I'm moving to Folsom at the end of the month.
Okay.
Yeah, that's me. So I'm born and raised in the Bay Area. I built my business out over here. My wife grew up in Folsom, and even though she's been living for the past 9, 10 years with me, she always had an eye to move back over there. So we made a plan about 5 years ago where we could keep the assets because that's really important for me to not sell, but to only 1031 or to retain. And yeah, we made the math work, and I'm grateful that we could get what she wanted up there and keep what we have. And that's another reason why I need this community. I need the accountability. I spend over 10 grand a year in business coaching on the commercial real estate side and my courses and everything and certifications, but that something is still missing. And I think it's this community, and I just see everyone contributing, and I want to be one of those people that jumps in and tries to help out as much as I can.
Gotcha. Yeah, somebody else had a question or something?
No, I was just gonna go back to what Jared kind of said, where like, um, how like these big groups and like different mentorships or people trying to just sell you something. I was actually just on the phone a couple weeks ago with one of these mentorship coaches, but he was literally on the phone kind of almost like being aggressive with me and being like, you gotta get on my program, and like before you get off this call, like you gotta make sure you have an answer. And I'm like, you know what, how I work is like I like to, shut the phone down. Really, I like to make my decisions when my emotions are like kind of regulated, not like all raw, raw, raw. Like, you gotta go do this, gotta go do that. And I'm like, and he was just like telling me that's not the best idea. And I'm like, okay, maybe I don't want to get on your mentorship or anything. So I'm pretty grateful that I found this group. And yeah, for like $20, and everybody's like really into it. Everybody's like kind of there responding, and I was just like looking through all the forums. If anybody had a question, everyone's responding really quick. So it's pretty awesome where I found here, yeah. But yeah, that's just where Jared was coming from, yeah.
Yep, I agree.
Yeah.
Well, cool. Anybody have any topics or anything you want to jump into? I know we've got a lot of like macro stuff happening, real estate happening. You got a little bit of uptick in some foreclosures that's probably going to creep up a little bit, and some other things like that. And pretty tumultuous, I guess is the word. Crazy times we're living in.
Thanks, sir.
I'll throw a topic out if everyone's okay with that. We all say real estate is hyper local, right? And in my market in the Silicon Valley area, the vast majority of buyers are going in and using their stock options. They're liquidating them, and they're using them for these, crazy real estate prices out over here, right? As a down payment. So that's generally what they use. Now, ever since the tariffs came in, a lot of their portfolios went down by about 30%. And a lot of them shot back up, not to what it was, pre-tariffs, but market. There's different markets.
Hey, so you're probably in a bad spot. We're not hearing you.
Yeah, Jared, you were talking about foreclosures and stuff. I've been dealing with that auction one. Banks just are a pain. They don't understand what the property is because nobody's local. They're just going off sheer number. They don't see, hey, that place has been vacant. There's a well, there's a septic. If you can't let me inspect those things, I'm not going to give you a good offer. That's the biggest problem I'm running into right now. Because they did a second round on this property, and I was the only one that bid again.
Really?
Yeah.
That's awesome.
Yeah, but they're still not accepting because it's below the threshold that they want.
Do you know who the bank that owns it? Do you know anybody there or network with?
You can't talk to them once it's in the auction.
Oh, okay.
Yeah, once it's in the auction, they're set 'cause they got a set contract price with the auction people.
Oh, yeah, that's right. Yeah. Yeah, like Matt the Lumberjack talks about that relationship, building relationship. Zuber does too, about building relationship with the banks and smaller banks that maybe have either like commercial or residential on their books, and then they might reach out to you prior to even going to auction. That's what I want to work up to once I retire.
Yeah, but it does me no good to talk to a bank. They're not
Yeah.
going to fund me.
Yeah.
So yeah, I'm strictly DSCR. Now I was looking at Robert's question about 10,000 loan costs. That's expensive. It's in the chat.
Yeah. What is that? Okay, so not a bad place to talk. Oh, it depends. I've noticed in the last I don't know, last year, I guess, the DSCR, I started looking at my loan. I've done two DSCRs, so it's not a big reference pool. But even the first one I did versus the second one, there was an uptick in some costs in there. And I'm like, what the hell? And I was a little bent. It's the same lender. So I don't really know what that means. Nothing major, but probably like an extra $1,500 in there for different stupid crap. And I didn't care at the time because I wanted to get the house and get going. But it's something I noticed to the point where I'm actually looking for a different broker, different lender. Cause I'm like, I don't like that. And then they did some stuff to me too that pissed me off. I ended up paying extra wire fees because at the end of the day, I owed another 760 some dollars that they didn't account for. I was like, and I was just in a hurry and they should have paid that, right? But whatever. So I ended up paying it, just get the house and I'll move on down the road. So
Yeah, I'm working with a local mortgage broker, and he's telling me that Convoy and Velocity are a lot more expensive. Yeah, they might be.
Velocity for sure.
Yeah.
Yeah, Velocity, I like Steven Dowd and all that, but he's like the plan B guy. And he even admits it, right? Like, if you got your plan A and it doesn't work, then he's a plan B guy, but you're going to pay for it. Convoy, I've never done anything with them. People like them, I guess. I've got a file with them. I've got a file with like 5 or 6 brokers, just to be ready for the next one and compare. If you guys don't have that, I'd recommend doing that. They can do soft pulls. You don't need hard pulls. And also I keep a folder of all the typical stuff that they need. And then I update it once or twice a month if you're a W-2 person with your latest pay stubs or whatever changes over time. And the reason that matters is like if you come across a deal and somebody wants to close in 10 days, I've had this happen to me twice. I can fire off. I don't have to run through hoops. And then the lender appreciates it because I've closed a DSCR without a file with a broker before in 10 days. And that's just the only reason that happened is because I took action, responded to their communications, and I was ready. And so everything has to line up. So just a little tip there: if you find a good deal and you need to close quick, just be prepared. So
yeah, I already have a file prepared for my HELOC, so I'm just keeping that around.
Yeah, was offered on a 6.4 rate from Convoy and 7.5 with 60 in Michigan. Heard it's expensive, 10,000 in loan costs. Yeah. My last one I did, like I said, it was about 12 grand. And the one before that was like a high 9s at 10. So it was weird. It's like an extra 2 grand. And I dug into some of the fees and they went up. And I'm just like, nickel and dime. That's why I've got to work on what Matt said, to work with your local credit unions if you're focusing on one area. And I did that, but because I'm fairly new, I've got 2 years of tax returns, but the first year wasn't very good. The credit union said I had to finish up this tax year, which I just finished, ended up owing 50 grand, which sucks. I thought it was going to be 20 and ended up owing a lot more. Another reason I have a different accountant now, but anyway, yeah, I want to get that local credit union or local banks or whatever. I think Matt, the lumberjack, says find a local bank that has under 3 billion in assets and only 5 branches, right? And that's kind of his target. And he's got 25 years of experience. So, take that, do your own due diligence. But that's, I think, what he recommends. And I haven't found that yet. I found one with 7, and they're about 8 or 6 or higher, double the 3 billion range. But I'm trying to work my way down to that. So looks like Kevin has a question too. Is everybody doing 30-year fixed when grabbing quotes? I have been. And if I was to buy another one right now, though, and I'm an anti-variable guy, I might consider it, put it that way, but I don't know. We'll see.
Because you're going to just refinance out of it, right?
Well, it depends on your belief. Now, everybody believes what they believe. I'm watching macro, and if it was a 5-year arm, I could potentially see myself, and I know Zuber would freak out if he heard this. So 99% of you don't do this, but for me, it depends on your situation, right? Everything's situational. So if you've got money in the bank and you've got a W-2 and you got all this stuff that can help you get out of an issue if it happened, then it might potentially be worth it. But so far, yeah, I've done everything 30-year fixed rate debt. What's everybody else doing?
Well, mine's cash because I'm still waiting to get it finished and then burn out. But I'll have 3 months in June, and then so my normal brokers tell me I got to go wait till 6 months. And I'm like, dude, then I can't work on any more deals. That's not working for me.
Well, I was telling, is he still here? Oh yeah, Rhea, before we started recording here, look into private money. Like, what we should do is we should have a little side thing. I should get some of my old private money people together and have like a little side thing if people want it. I'm not trying to, by the way, I don't get anything for this. You guys know my story. I started off private money lending, and there used to be about 130 people in that group, and I think there's a couple hundred now. So chances are there's somebody in that group. I can reach out to them, and if you guys give me your situation, say, hey, got some people I'm networking with or I've been with for a while, and I know and trust them. Like, if you guys want to talk to them, here you go. And I just get out of the way. I'm not, there's a lot of people but by the way, for people that are new here, I'm not knocking it, but there's people that they call connectors, right? And what they'll do is they'll be like, oh, here's the deal and here's the lender, and they'll be in the middle and they want a fee for that. And that's fine if somebody wants to pay that and do it kind of like a wholesaler. But me, I'm more of a add value and get the hell out of the way. You do your own due diligence, and everybody, at least for me anyway. But if people want that, let me know. And I put my email in the chat. If you wanted to zip me an email, I could set something up. They're good guys too. The guy who started, I was, just to give background on that, in one of the other communities, it was me, I'll say his name, Greg, another guy named Ed, and then I forgot the last guy's name. But over time, ended up just being Greg and I. And there's only 4 of us that started this little small group. And it wasn't the group started not to be a group of private money lenders to go out and network. It started to evaluate deals amongst the private money lenders, kind of like this, except in the private money lender space, about, hey, did you think about this? Or, hey, if you're going to do a second position loan, make sure to check that first position lien to see what the hard money, usually it's a hard money or a flip. Check that hard money lender to see if they have any provisions in case they foreclose, because it might be a 20% fee. Some of them do that, and that cuts you out a second lien, stuff like that. And then it evolved into this whole big thing. It blew up, right? And Greg's still the leader. He's a good dude.
I think it'd be good to have somebody like that on, just to go over the system and say how they look at things.
Maybe I should bring him on next Sunday.
Yeah, that'd be awesome.
Would people want me to bring Greg or one of the guys from that group on just to talk about it?
I do.
Anybody against that?
I'm down for that.
All right. Yeah, that would be good, yeah. And there's all kinds of lenders in that group. There's like me, I was a 6-month and under short-term guy, higher rates. But there's people in there with a lot. There's a guy by the name of, I don't want to say his name. There's a guy in there that lends to like NFL players. He's, $1.5 million loan, shit like that. And there's some whales in there, in other words. And those are the guys that you want to reach out to if you don't want to do a bank, like a long 30-year fix. I don't think they do 30, but they'll do like 5-year interest only, that kind of thing. If you're trying to get up, all kinds of different lenders in there. So let me take a note, reach out to Greg.
See, those would be perfect on like one of the deals I'm looking at. It's a house on an acre, and I want to put an ADU on it. Well, it'll cash flow just a little bit once the other one's flipped, but in order to cash flow it good, I need that ADU. So that's going to be a two-year play.
Yeah. Hey, I just thought of something. I need to reach out to Zuber to make sure he's cool with this.
Yeah.
Because this might be one of those areas that he'd be like, hey, look, man, I don't want to introduce weird stuff and mess up the community. It's his community, right? So I don't know if it's cool, but if he's assuming he says yes, like I brought my realtor on a couple of weeks ago, and he said you can bring people I know on, and I do know Greg, but this is a little different in that.
Yeah, but all we're looking for is the information on how they do their process. That's it.
Yeah. Okay.
Because that helps us out doing our due diligence.
Yeah.
What those private money people are looking for.
Yeah. Well, that's just it. They're just like with banks or just like investors, everybody has their own different lend box, right? Like I would, and this is the cool thing about those communities is let's say I had it like Henry Washington, right? He said, "Hey, I'll do a loan with this." Like, "Hey, man, look, that's a year loan. I don't do that, but hey, talk to this guy." And so I'm a 6 month and under blend box, right? And 12%. And so a lot of people like Michael Mitsakian, if you know him he's an ORAT. He's also in Sub 2 and other groups I'm in. He flat out told me, he goes, "Hey, you're too expensive for me. I can't afford your rates." I'm like, "Okay," because he's got lenders. He's an operator, right?
Right.
He's pretty awesome. So he can get 8% because he's got a track record, and lenders look at him and say, "Hey, that's a pretty solid 8%." But me, I'm like, is what it is. But yeah.
Yeah, see, because I have my HELOC, then I have about 200 in private money through family, and we're doing the 8% thing too.
Yeah.
So they're making some money on it, especially now that the stock market's not doing that well. So I have about 400 invested, or that I can invest, but that runs out quick. It's amazing how fast that kind of money runs out.
Yeah, I blew through 300 in a year.
Yeah.
Yeah. So
That's why everything I have to do is value add, or I'm not going to be able to keep doing this. If I just put down payments on stuff, first of all, I'd be paying 10% on that HELOC, and that just doesn't pencil out.
yeah. Okay, and then he said seems to not worth 300 a month. Well, it depends on where you're at there, Robert. And then I'm looking to do a bridge loan and then go into permanent debt. Hey, I don't know, I haven't done it, but I think Convoy does bridge loans, don't they?
Yeah, I'd be worried about those points though.
Yeah, it depends on your risk tolerance and where you're at.
And that's why I started doing with the cash, is because of points. I don't want to pay that 10 grand.
If you got it. I mean, sometimes, you got to do what you got to do.
Well, I have to live with the patience, and I'm not a very patient person.
Me neither. Yeah. Well, cool. We got quite a few people on here. Any other topics people want to jump into?
I actually had a question. I know Jim's a contractor, so as a first-time investor, as an out-of-state investor, would you recommend going to something big like a Burr or something smaller, just like a little value add property as a first property? Obviously, looking in at like for single family homes, what would you generally recommend, or you see investors fail or do well for first-time investment?
I am a newbie. I just got my first property in March. But I've been a contractor for 30 years.
Nice.
It's all different because doing construction, what I do is remodeling, and I'm a mid to higher end remodeler, so I had to flip everything around because you're not going to put that same quality stuff inside these rentals. Now I am doing the value add, and I'm also making it to where I don't have a lot of CapEx to worry about. So I'm making sure the roof's good for 10 years, new water heater, new HVAC, all new appliances. So I don't have to deal with anything like that for minimum 10 years. Are you trying to do the work yourself? Or are you trying to bring people in? What are you trying to do?
So I got to do out of state, so obviously I got to find some people to kind of bring in, build a team, build some good contractors, and I've heard a lot of horror stories of, contractors not doing the work and contractors, running off, right? So I was just trying to see as a first time investment what I can do, kind of mitigate that risk. Obviously, uh, you make the money where you buy is like, and I feel like you can gain equity right away if you buy something that's distressed, come in, fix it up, either refinance or do a flip. But it's as a first time investor, it's like almost like, should I do it or should I go for something more turnkey and safer?
Well, just like Jared just said, it depends on your risk tolerance because you're taking on that risk of a value add.
Yeah.
You might want to see, I pulled out a HELOC, so I have an interest rate to worry about. If you've got money in savings and you're not having to worry about that interest rate, I might actually just buy a property in a different market and then see how that goes. One or two that a lower interest or a lower get-in start value, and then see how it goes. That's because I don't have a choice. I have to do value add and I have to do work on that ARV because that's the only way I can do this. I'm looking at two other markets too, and it's a challenge. I'm trying to get people to communicate with you is not easy.
Yeah.
Yeah, that's because I'm trying to create that whole thing. I've got systems already started, but trying to find exactly the people you want to work with is not easy. One market, I can't get them. They'll talk to me for a little while, but then they don't follow through with what I ask them to do. Then the other market I'm looking at, they're following through with everything, and they're new. So I'm starting to get to figure that out.
So
I don't want to throw that out there because somebody else referred me to them. So I'll put my email in here and let me talk to them first, and I'll tell you if I can give you that.
Stephen, what are
Um,
your goals?
yeah,
My
exactly.
is obviously having the cash flow replace my income and expenses and being able to kind of free up some time 10 years from now. I'm not looking for, anything in the short term. I definitely want to have something long term, right? So, yeah, long term buy and hold. Definitely, but I hear that with Burr, you can kind of scale a little bit faster, you know what I mean, pull all that money out. But my ultimate goal is, yeah, to replace my job because I do barbering for a living. My wrist is gonna go, my back is gonna go eventually.
So you don't want to invest in real estate and take a haircut. Sorry, man. Had to do it. Had to do it.
Yeah. But yeah, no, that's my goal, and I feel like I'm just in a analysis paralysis, would you say? You know what I mean? Just kind of just stuck, and I'm like looking at one market, and then obviously all of a sudden, oh, I hear like this market has too much crime. So, for example, I was looking at Memphis, Tennessee in the beginning, and with Memphis, obviously, I think you guys heard about all the crime there and whatnot. And I'm like, let me shift away and let me go look at Columbus, Ohio, with the growing population and job growth, and with the Intel's new plant coming in there. But I'm looking in that
Really,
market.
the plant, it's on this. I don't know if this is public, but just
Yeah.
FYI,
Yeah.
it's put off until 2029, 2030.
Oh my God, I didn't even know that.
Yeah, I
What
don't
was
know if it's
that?
public. I probably shouldn't have said that on a recorded video, but I work there and I have two. I'm actually directly involved with that plant
Wow.
and Arizona, Costa Rica, all these different places. So I'm an IT manager at Intel, and so just I wouldn't if your big plan is tied to Intel,
Yeah.
might be a while.
I didn't even know that, and that's where it goes back to analysis paralysis because I was looking at properties in the B class um, area within the $200,000 mark, and it's almost, I wouldn't say anything's impossible. It's pretty darn hard to find something in B class down there with, yeah, with the appreciation. Like I properties appreciate over like 60% within the last 5 years, and finding anything in that B class area is almost impossible now. So I'm kind of like shifting towards there, and now I'm like, yeah, I'm just trying to find a market where it kind of fits with me. So just kind of stuck right now. Yeah.
One thing that like Zuber says is you got to really uh, dive in on that market because you're saying the crime might be bad. Well, there's going to be pockets that are going to be really good.
Yeah.
So you got to find that pocket that you really like and then just research the crap out of that.
Hmm. Yeah.
That's I would definitely look at that because that's part of the things I'm looking at too. Because I'm looking at Gary, I'm looking at Pittsburgh,
Yeah.
and they have some really good areas. They have some really crappy areas.
Hmm. Yeah.
So that's one thing to say about Gary because they're mostly crappy.
Yeah.
I'll say
But yeah,
something.
but there's still good pockets.
I'll
Yeah.
say something on that too. The first house I bought, I did all that research, crime and this and that, and
Yeah.
I flew down there and I was like, not going to do that. And I migrated and found an area, and within a couple miles, that area is pretty good. But
Yeah.
then what I didn't think about, and it worked out good, but people work in a range around that area. And so some of those areas aren't the best outside of that. And so the type of now this doesn't apply to that direct area, but it's the type of tenants that you're going to attract,
Hmm.
right? To keep that in mind is because I'll tell you that first it's profitable, it's doing well, and also I'm in a weird strategy. But the type of tenants I get from that area, little rough, but they work ish. But so I migrated and went to a different area. And you know what? A good metric that works for me, might not work for you, is the medium income in that area. So I can tell you that the median income in that first area I bought is 28,000 a year. Yeah. And then the other two houses that are doing great are a little bit better than that one. It's about 50 grand, 47 and 52 in those areas. So I'll say average of 50. And then the Gilbert house is 87. And so it's one metric. I would never pin anything to one metric, but it's a metric that seems to correlate with the type of members I get.
Hmm.
Not that it's an end all be all, but just consider if you're looking at the area and wherever you're at, if it's great in that couple mile place, you think, oh, great. And you go there and the neighborhood's great and all that. But consider a little bit bigger diameter, if you will, for the tenant portion of that. Because there's the property. In my mind, it works. There's the 50-50. There's the property itself. Does it fit your strategy? Blah, blah, blah. And then in that market, it's the type of tenants you're going to attract with that property. So it's a 50-50. And I kind of screwed up on that first one a little bit. I mean, I got lucky because it's still profitable. And again, I'm in a weird strategy than for people that don't know, I do rent by room, totally different than long term and all that stuff. So I'm hitting the lower end of the economic scale, if you will.
Yeah.
So anyway, it's something to consider.
How would you be able to find the median income in a certain like zip code and area? Like,
Oh, I use there's city data is one of them, but there's several tools. Let me go look. City-data.com, I think it is. Let me go look. City-data.com is a good one. The guy that puts out stuff is oh crap. It's not Altos, but there's a bunch of different. Let me go look at my I'll put it in the chat. You guys continue on and I'll put the links in the chat to those.
awesome.
Yeah, right now I'm riding on coattails of other people for out of state, but I'm researching it. I'm not in that yet. I'm still, if I can stay local in California, I'll keep doing it here.
Yeah.
But that's not easy.
How is California? Are you still able to find a deal here and there in California?
So I'm in Sacramento. I'm buying in Calaveras County. It's
Yep.
more of a not really distressed, but it's remote. So it's up in the hills. There's nothing really to compare. So it's hard to find comparables for solds. It's hard to find comparables for rents.
Yeah.
So I'm taking a gamble.
Yeah.
Yeah, especially on this property because it's two houses on one lot. So it's not as easy to sell that. I'm doing one as a long term, one as a short term to test on all the systems. I should be able to be fine on this particular property. Then another one I'm looking at for to purchase as a on this auction site. Same thing. I mean, I will make my money back no matter what.
Yeah.
So once I start renting, I'll have my money back through DSCR.
Mhm.
So no matter what, I'll have 20 to 30% in the actual income from doing the BRRRR. And then if I cash flow off that, great. Otherwise, they look to sell it in a year.
And you're a contractor so for like yourself, so I'm thinking like the exit strategy, if everything else fails, just sell the property. You'll probably be able to make some money too, right? Yeah.
Exactly, correct. That's my whole point. I DSCR out of it, and I've already made 20 to 30%
Nice.
on that dollar. Plus, I made money from my construction company. I'm not going into it making nothing for the construction company too. So I'm keeping my buy. When we have certain things going on, we pull off and come down here, and then I have my guys go back up there to do other things. I'm still learning this system. I'm still trying to figure it all out and navigate it. I didn't think I was going to be quite as busy this year with everything going on as far as the remodels, and then I got slammed all of a sudden. So it's actually killing me for time. And then I learned a crap ton up there in this particular county because California is difficult for building. So I get into it. I knew I was going to have to do some certain things. Like the windows did not meet egress. The insulation is going to be wrong for Title 24. So I ended up having to redraw the entire house, put those new windows in. I had to do some special framing to make the thicknesses for the insulation. There's a bunch of stuff. I had several appointments that I went down to and talked to the building department on. It's a lot to navigate. That's why I was saying if you can, find something that you might think will cash flow and try that first. But the biggest thing is get in. Like you said, analysis paralysis. I've learned just as much through all of my analysis and looking as I have through starting this first property.
Yeah.
It's huge. Do you watch Dion at all?
No, I don't watch Dion.
I would recommend you watch Dion's I'm in 7 different groups, and I learn different things from each one of them. But the reason I like Dion's is he goes through that whole thing of looking through an area. He goes on Realtor.com, he looks through the satellite, looks at the area. Take for it what will work for what you're thinking of doing, not just what he is. Like he doesn't like good school districts. He likes to rent during the winter and not in the summer, stuff like that. Weird things, but it works for him. That's one thing. Yeah. They just put it in the link.
Yeah.
In the chat.
That's why the goals is important because his goals are different than some. His goal is to get the most amount of cash flow from the least amount of properties with the least amount of headache. Like, he doesn't want to spend a lot of time working on it. Whereas me, I got a lot of headache, but I can make good cash flow. So for me, my goal was cash flow. The time didn't matter as much. So just consider the source. Like I do the same thing, Jim. I'm on all kinds of macro YouTubes and all that. And that's the key is if you guys watch, there's a channel called Alux, right? And they're trying to sell you something. And I watch it, but a lot of the key things you get out of the ALUX videos is about the rich and the wealthy and what they do. And one of the main things is they have mentors, right? Other people that have been there, done that. If you try to go solo, you know, your law of averages says you're going to shit the bed,
Right.
right? Whereas if you have a mentor, somebody that's been there, blazed that trail, albeit different times, different effort, economic things. Some of the things are, they carry through, right? Mentors, learning from other people, you know, tax laws in this case, and things like that. Learning from all these other people that have been there, done that. So, and Dion's a good one too. Matter of fact, I disagree with half the stuff Dion does. Like I do. Dion has never taken any bonus depreciation. To me, that's a sin. I am in growth mode. I will take advantage of I cost seg, I bonus depreciation, and I don't know if you want to grow fast. He was working. He had kids. Consider the source. His situation was such that he didn't have time to do all this stuff. He wanted to make it simple. Cool. Right off the MLS. Cool. Me, I'm looking off market. I'm talking to seller, direct to seller. I bought one direct to seller. I have bought off market, but yeah, consider the source.
Yeah, like Jared was talking about too, your goals. Like my goal is within 10 years to have $200,000 a year in income, in cash flow. That's my goal. So you start from that back end and work your way down. And I don't want to change the way my life is. I'm not cut back certain things, but I'm not going to change the way my life is. My life's being afforded by my construction company, so I'm going to keep doing that. So I'm going to find that money to keep going. So I'm going to keep taking my trips. I might cut back a little bit this year, but I'm still going to different things because I work too hard not to. I'm working all day today. I'm on here and then I got to go put a floor in. So that's, yeah, I'm not going to change it, but do have that goal, and I set that goal from the back end, and I worked it all the way down from the start. I'm hoping to have at minimum 3 properties by this year, end of this year.
Wow.
And then next year, I'm going to hopefully add another 5, and then the year after that, 10, depending on cash flow and rates and everything else. Because once these rates change a little bit, hopefully I can get that down, and I'm going to be cash flowing another $300 to $400 on each property if these rates go down a little bit. Now, they're not getting down to the 4s. That's not going to happen. That was just a misnomer, and it'll never happen again. I think the lowest we'll ever get is like 5.5. It's just, and that's my opinion. I don't see us getting lower than that. Yeah. That's part of the problem that the housing crisis is in right now. Nobody wants to sell that 2%, 3%, 4% loan. Nobody wants to move.
I've got a
2.25. I'm not.
Yeah, I've got a 2.25, and I'm not touching that with a 10-foot pole.
No, exactly. And nor should we.
Right. That's the asset, is the rate. And also,
yeah, and all the people that were in that time frame that could refinance, that's when they gained most of their wealth, most of their cash flow. That probably doubled or tripled their cash flow. That's just a sheer guess, but
yeah, I can't imagine I bet everything just worked back in the day with that 2.25% interest rate, right? Oh my God.
Yeah, but you had to be in a position to be able to take advantage of that.
Yeah.
So if you weren't working before it didn't work.
Yeah.
Yeah. So like they always say, you got to get in when you get in. It's just, you got to start. You got to start sometime. And yeah, it's going to be harder and everything else. But yeah, I'm definitely, because I just started researching this last year. I'm not even on a year of researching yet. And I am so hooked. I'm so addicted to this. It's ridiculous.
I will say one thing, and this is counter to most people out there, but you know, I would say watch the unemployment rate. So and I think Zuber's said this on his channel, but you know, there's like 4 or 5 different levers. All of them have been pulled except for the unemployment rate. When that unemployment rate starts to spike up, then I would start to, you know, pay attention to the 10-year, the 10-year bond. Obviously, right now it's gone up and whatever, and I was a little bit bent on it, but I'm actually okay with it because I think, like, once that unemployment starts to spike up, they're going to get put in a tough spot, and they're going to have to drop rates more aggressively. Now that's the front end of the curve, but in general, it'll send a kind of a shockwave, and we'll see what happens. But I think appreciation is going to be flat for a while, like a year or two or a couple of years or whatever. So we don't say bet on appreciation anyway, but you know, I think it's going to be a little flat. But as far as rates goes, I agree with you, Jim. I think it's going to come down into the 5s, I hope, and then I'm going to pay points to get a little lower if I can, and set it and forget it. So Brandon Potts, that's in the ORAC community, he did that. He went out and he worked with Lending One. So that's another lender that just showed up to the ORAT this year, and he is pretty happy with them. I don't know anything about them, but they're backed by a big hedge fund. I think it's like BlackRock or Blackstone or one of those. And he ended up getting a 5.4. He did pay points to get there, but he got a 5.4. And this is in today's environment, just like a month ago. So FYI.
Yeah, I've been looking at lending one. The only problem with him, you have to be an entity, and I don't want to be an entity right now. Not when I'm starting.
Not in California, yeah. You get
Yeah, I just want some freedom right now when I'm starting out.
Yeah, I have an entity, and I did talk to him, and I like him and all, but I'll check with him on the next property. I'll do my evaluations then. But
Well, 'cause I won't start an entity until I have at least $1 million in worth. That's just pointless. I've run my business for 30 years and haven't had, knocking on wood,
yeah,
have not had any issues. You just got to carry the right insurances.
Yeah, again with your goals. So like for me, I want that anonymity, and that was important to me to set it up to where I can, I don't want to say hide money, but move things in such a way that if I do get sued, or I'm in a little bit more of a higher risk strategy than some of you guys, and so I've got more people in there and lower income, and it's possible that I get sued. And so I have everything about me is detached. So if a lawyer comes to try to attack me or whatnot, they're going to have a hard time finding out what equity or what I even own. So I had a different reason for it, not just necessarily the, lending in that side of the house.
So did you do the holding company too?
I did. Yeah, I did that from the start, and partially because I had ran a company before, urbanebags.com. We sold like Jennifer Aniston handbags and crap like that. I don't know. I wasn't the wife thing, and I did all the back end and the IT stuff, and she did all the sales. Anyway, I made a major mistake with that. I put my freaking name on the LLC, and dude, I got inundated with like daily. It was ridiculous. So that was another reason I wanted the anonymity, is I didn't want to get inundated with all these freaking calls from businesses, and let my wife still gets calls on they want to give her millions, and I'm like, hey, take it. But obviously it's anyway. So be careful with the naming of putting your name on anything just for the advertisement blowback you might get.
Yeah, and Stephen too. I don't know if you've been in the Skool.com or whatever it is. There's a lot of information there, a ton. I've just been actually researching it because I've been involved in so many other things. There is just so much information on that in that Skool website, Classrooms.
On what Skool there, Jim?
It's a school. It's the Skool website, Skool.com or.
Oh, Skool website. Yeah.
Yeah. So you have the chat area, but then if you look all the way at the top, you have a thing called Classroom. Yeah, look in the Classroom. There is so much information in there.
I didn't know that. No.
Yeah.
Oh, yeah, definitely take a look into it. I was just surprised on how many calls every week. I was actually on the out-of-state investing call on Friday with Vincent. Lindsay couldn't be there, unfortunately, but and then
man, that means it might not get uploaded. I wanted to hear that when I was working. I wanted to hear that when there was a lot of good talk going around there.
Yeah, I was only there for a short period of time because my client was waiting inside the shop. But yeah, within like 30 minutes, it's like got a lot of good information already from them. So it's great.
Yeah, I'm gonna send Lindsay a chat right now.
I'm really happy that you guys brought up the LLC thing, and if I can, have you unpack that a little bit more, because I currently have these two rentals, and one of them is under an LLC, and I'm about to put the other one in an LLC under a different name. So I'm a little fuzzy with my knowledge about these things, but I hear that if you put in separate LLCs, it's harder to kind of track. But I did put them in my name, when I made those LLCs via LegalZoom. Is that still helpful that I did it? Did I just waste a bunch of time?
Mark, the financial firefighter, would be the best one to talk about that, because he put a lot of his in individuals, and it's cost him all kinds of trouble because he can't change things. You have to pull it out of the LLC to do something, or it's a big pain. I'm going to put like 4 or 5 properties, 6 properties in one LLC. And then here's the problem: if you want to sell one of them, you got to pull it all out. I don't know all the stuff about it, but the research I've done, it's not easy. It's a lot of work to deal with.
Geez, it's so like you hear different things, right? I hear Gerard and I hear you, Jim, saying this, and then my property manager says, "Oh, good job. That's so great that you put him in 2 separate LLCs. That's the best thing you should be doing."
So I'm like, geez, can I just get a straight answer here?
The answer is it depends.
Yes.
That's the answer. So, the state thing, like if you're in California, I wouldn't do the LLC simply because of the rent caps in California. But I don't invest in California, so it doesn't apply to me. And then also, if you do a quit claim deed, that doesn't do you any good. If your goal is anonymity and you do a quit claim deed and you move that into an LLC, that does you no good because a lawyer, if your goal is to avoid lawyers, because when you do a quit claim deed, all that does is renounce your ownership in that, and then it goes into the LLC. Well, guess what? That's a paper trail from you, and they know that. So it doesn't work. There's ways to do it. Sometimes it's through land trusts and different type of trusts, or sometimes it's the way you execute. It's if you do the simple way of, if you say you buy it in your own name and you want to move it into LLC, I'm not a lawyer. Do your own due diligence, but don't do a quit claim deed. Do a warranty deed. That way it moves, and it's not trackable. It's not as easily tracked, right, from your old name into that LLC. And so, but also, if you're doing two different LLCs, that if your goal isn't anonymity and your goal is to separate for being sued or whatnot, do you have enough equity in the properties to even matter? Like if you have no equity in either, there's no real, from the being sued point, a lawyer is going to look at that and say, there's no equity here. I'm not going to even bother. I'm not going to waste my time,
Yeah. Your best bet's insurance. You get normal property insurance and get an umbrella.
Gotcha.
Yeah.
I'll do the umbrella. One of them I own outright. The other one has 30% equity inside it. And my goal isn't necessarily anonymity. It's more for the litigious state of California, right? And just being mindful and covering my tracks. So when I purchased the property, I bought it under me and my wife's name, both of them actually. And then before the renters moved in, I changed it into an LLC. So I don't know how much that helps me, and I know none of us here are attorneys, but based on your experience, did I do anything to prevent myself from getting sued?
I mean, you can't prevent getting sued. I think you can only mitigate, right? With the insurance, the umbrella, the LLC is one of those things that depends on who you talk to, right? But the thing that the first thing you said is you own one outright. That is a big target these days. I'm not sure about California, but a lot of people in the investing space, even though they own properties outright, and I've heard Dion talk about this, is they'll go out, and I have some other friends of mine that did this. They'll go out and open up a HELOC and not even use it, just so there's a bank involved, right? So a lot of people go out and pay for title, what do you call it, title insurance, like our title. They watch their title, or they watch their properties for them in case anything happens, like if someone tries to steal it, you get notified. Well, you can do that, not for free, but you can get a HELOC on the property and accomplish the same thing, and then put that on the bank. You know what I mean? So that way the bank is involved. But if you're on your own, the easiest way to explain is it's you against whoever's coming after you. Whereas if you have you and the bank, and that's a deterrent. Like if I'm a lawyer, if I'm trying to sue and the lawyer looks into it and says, oh crap, there's a mortgage on the property, they don't know it's a HELOC. They just see that the bank's involved, or bank's on title in first lien position. If you do a first lien HELOC, if you own it outright, you could do a first lien HELOC. And actually, it's a way to tap into some of the equity for smaller, if you wanted to. But the point of bringing that up is be careful with owning a property out. Just ask David Green.
Yeah.
Right. He had 30 get taken from him. Right.
Yeah, he got burned big time.
He got screwed, right? And some of that had to do with the state of Florida and how there was a bug there. But point is you're less likely to get, taken, if you will, if you got the bank involved.
I appreciate that insight. Thank you very much. I mean, my goal is to 1031 into a multifamily within the next 2 years or so, just when rates become a little bit more favorable. That's what I'm on the horizon right now. But I had never heard of this before. And it goes back to what I initially said when I got on this call, that I came just to learn, and I'm learning just from this conversation. So I appreciate you guys.
But consider the sources. We're all different states and different strategies and different background and whatever. So definitely talk to the lawyers and the accountants or whoever you need to talk to. So this is just information that flows, and everybody here is expected to do their own due diligence. Not everybody knows it all.
Yeah, that's one thing I will not do. I won't do any kind of online setup whenever I get into it. It's going to be an attorney that's going to set it all up for me. It's going to cost me a little bit more, yeah, but I want to make sure it's what I need and what I want. I don't want to just kind of throw money at the wind and say, okay, I'm going to do this.
Yeah. And I think Dion and Matt and Mike all talk about this. So like if you set up an entity and you use that entity, make sure you're doing your minutes, and you're doing the things that keep it, and also your books, make sure your books are separated. You don't want to have mixed funds, right? Because if you do that and you have an LLC, you just voided the whole damn thing, right? It's a pass-through entity. So, disregarded entity, and you got to be careful with that. So like I've got everything's separated. So this is business, and everything personal is personal. And then my wife and I. So here's a little tip for you. We travel to have our board meetings. So our we
Oh, yeah.
go on we go on cruises, or we go to the Vegas. I know it's horrible, but we'll meet and then we'll have our board meeting, right? And that we're traveling, so the whole damn thing's a write-off. But we have our board meeting. We keep our let me I set up mine. So we have our books. Oh, you guys aren't seeing physical books. Shit, the damn blurry thing. I went through KKS Lawyers. I did go through PCS, Prime Corporate Services, the first time, and I set up some stuff, and it was okay, and it was relatively inexpensive, but I had a lot of questions, and so I switched gears and went with they're called KKOS. It's Matt Sorensen and Mark Kohler. And the reason I did that is I actually met them. Well, I didn't meet Matt in person, but I met Mark Kohler, and just a 10-minute conversation with that guy earned me 45 grand. And so I was freaking sold. He took the time. He was busy. He was ready to go to North Carolina. And most people run into movie stars or actors or whoever. And like me, I see Mark Kohler. I'm like, you're Mark Kohler. And he's like, yeah, he's an accountant lawyer. And my wife's like, what? And so I got to spend time with him, and he gave me a tidbit information. This guy's multimillionaire. He's got a bunch of companies and all this. He'll buy properties, one or two, at the end of the year in December, and rent it out one time to get the short-term loophole, right? And so it's not really a loophole. It's a tax. So you can take. I'm getting off topic here, but basically, I used his advice, ran it through Kevin Kennedy, who's my lawyer. He's like, yeah, that absolutely works. Cool. So anyway, what I did was I ran it as a short-term rental in 2023, and then 2024 in January, flipped it over into my strategy, and I got to write off everything off my W-2 because it's an active activity and active to active, not an active to passive, right? And so the following year, and he did the same thing. He did tell me not to rent it out once. He told me to rent it out at least 3 times, under 7 days, materially participate. If you look up STR loophole, it gives you kind of the whole guidelines. But again, do your own due diligence. But it worked out fantastic for me. I got the write-off. I did a cost seg, bonus depreciation. I got 68 grand. It should have been more. I realized that later. Plus all my expenses for acquisition, obviously interest, but then also construction, all of that. I got to write it off, and I got to take it off my W-2. It was fantastic.
Yeah, see, I'm making my wife make more out of my construction company because she has a W-2. I do not. So I pay her wages. So I'm jacking up her wages so I can do that same thing.
Yeah, if you're married and your wife doesn't have a W-2, or if one of you doesn't have a W-2, and you get one of you to the real estate professional,
I'm going to be the professional. She's going to be the W-2.
That is this super duper cheat code. Like, we did the short-term rental because I didn't know about that at that time, but then I learned about the real estate professional status. I thought I could do it, but I couldn't. So now my wife is the real estate professional, and because we're married, we get to do that. So I can take the couple properties that I bought this year, and we already did it for 2024. Ended up being 81 grand in write-offs from the bonus depreciation from one property and about 71 for the other, plus all of the construction costs and of course your interest and your expenses. Anyway, we wrote off 265 grand this year, and I still paid 50 grand in taxes.
Oh, jeez.
Yeah, dude, it sucked. Well, part of that though is just full disclosure. I liquidated some IRA funds, and if you guys have that situation, you pay that. And this is something I learned. I thought it was a tax. It's not. It's a penalty. It's a fee. You can't bonus depreciate your 10%. If you pull off your IRA before you're 59 and a half, that 10% hit is not, you can't depreciate it. It's a fee. So, whoops. So I had to pay 24, half of that 50 grand was just that fee because I liquidated my IRA because it's considered income, and there's nothing you can do about it. It's a fee. So live and learn. But I wouldn't trade it. I still got the property. I'm happy. But moving forward, any more liquidations, I have that in my head. I'll take it case by case. But
and talking about entities, Dion is completely sole proprietor. He doesn't have an entity. And then Matt has a trust for most of his stuff. He has an LLC just for healthcare. Everything else is in a trust.
Say for a small investor like me, first time investor, just buying a single family home, I probably don't need an entity, right?
That
I would.
I'm not doing it. I
Yeah.
won't do it until I get $1 million in net worth. Once
Mhm.
I get to that point, then I will get I'll probably do a trust for the California properties. And then it's going to depend on the state too, because each state costs more. California is outrageous for an LLC. Other states are very cheap.
Yeah,
So I
800
would do an
bucks.
LLC in another state, but I won't do it here in California. I'll do a trust.
Hey, Steven, you're most likely going to buy a do you have a home now?
No, I don't have a home now.
Oh, you need the house hack, man.
Yeah, I was going to say, most likely you're going to buy a primary residence, house hack, and all that. So you're going to buy that in your own name. You can't do an entity on that, I don't think. But so yeah, you're going to put 3.5, 5% down, whatever. I would, well, you do what you do, but buy that primary and house hack, man. I mean, that's my strategy is essentially house hacking on steroids without me living there.
Mm.
Yeah, another one to look into and follow is PTO for life. Man, if I could do it over again, I'd be doing their whole formula.
Yep.
Every year they're renting out by the room, similar to what Jared's doing, but they're living there as well. So they get in there at 5%, and then they live there for a year, and then they do it again.
Yeah, for
They've
those that
done
don't know, you
eight
can
now, right?
yeah, you can buy a property. Yeah, they're basically retired, but you can buy a
Yeah,
property, a personal residence every year up to 10. And actually that's kind of a lot. You could buy the 11th one as long as you move into it live, but basically 10 properties. So that means you could, and I by the way, I have a the property manager that lives in my area did the exact same thing. He's got 9 properties as well. He manages properties, but he also manages his own. That's a case where he was a real estate agent, and then he started buying properties. And he's like 30, basically retired, but he started buying properties every year. And he got to like his 5th one. He's like, "Well, wait a minute, why am I doing this?" And so he started doing property management. Now he manages like 35 properties, and 9 of which are his own. And so that's what he did, the house hack every year. So it's pretty cool.
yeah.
My
I will say though, there is a change at the 5th one. It's like when you get to 5, there's a your debt to income starts to come into play, and there's some goofy rules there. So just that's down the road though.
So I'm actually from Canada, I think I mentioned. And where like my situation is a little bit unique is where like I'm in a rising appreciation market right now. Calgary in Canada right now is very hot. Everybody from Toronto and Vancouver are moving here. Like I said, houses for a duplex down here, we're looking at, upwards of $1 million. You know what I mean? And yeah, and then getting financing down here is very hard, especially with my unique kind of situation. That's why US kind of like g- why I kind of lean more towards US is because they offer products like the DSCR loan, where it's like, they don't look at your financials. They just look at if you know, the rent kind of covers the PITI.
You might
And
have a problem there. In the US, do you have a credit score in the US?
so I actually flew down to the US like 2 weeks ago and I set up a bank account at Comerica. So it's not an interest bank account, so I don't have a credit score. But I did talk to lenders or anything. I did get a pre-approval for a lender,
Oh,
and
nice.
she told me that yeah, I don't need a credit score. I don't need anything. As long as the property kind of just yeah, covers the PITI. Obviously, my LTV is gonna be a little bit like higher. I'm looking at anywhere between a 60 to 65% LTV as a foreign investor, since I'm not from the US. But that's where I'm sitting at. I think house hack is kind of out the window for me. So
Mm.
yeah, just still looking at it, out of state investing, somewhere in the US. So just wondering if I should build an entity or go personal. And I'm guessing what Jim's told me that he's not gonna build one until or make one until he has $1 million in net worth. So
Well,
But
I'll
here's the
mention
thing.
one
I don't know
thing.
anything about Canada or Canada.
yeah.
It could be totally different where you are.
Yeah.
I know nothing about that.
But if you wanted to build up your credit in the US, I've done this for somebody, is I put her on my credit. She had no credit, tons of money, but no credit. And so I put her on my credit cards for a while. It didn't cost me anything
Mm.
and kept the cards and everything. And so after I think it was 6 months or some certain amount of time. For maybe it was a year, but it wasn't that long. And then she had a decent credit score. I forgot what she told me, like 700 or whatever. So it's a help. It helps out if you could get the network and know somebody and they're willing to do that.
Hmm.
You could be put on somebody's credit, like a credit card or whatnot, and to let it sit for a while. As long as that person's not going
Yeah,
down, right, in credit wise, as long as they have a decent credit score, another avenue potentially.
that's awesome. I didn't know that you can do that actually. That
Yeah.
if
I've got all my kids on there. So when they turn 18, they're going to have a fantastic credit score and they've never bought anything.
wow, I did not know that. I definitely, yeah, that's definitely something I gotta look into now. Yeah, for sure.
So you just lock them out so they can't spend?
Yeah, they don't have a way to spend, right? I put
Gotcha.
them on the account, but they don't have the card, they don't have any of the information. It just their name is associated with my credit. And so that way over time their credit builds without having to do anything. So
Wow.
yeah, it was one of those things. This person helped me out with my well, we're doing the same strategy. And there's a legal document that's about 10 grand to produce. And so she gave me that. We did a little horse trading, right? I put her on the credit and then I didn't know she was going to do that. And then later on she gave me that. I was like, holy crap, saved me a lot of money. So it was a good deal. That's the whole thing of just add value and then good shit happens after that. Like I just try to add value and then magically things happen. Like my third property, I didn't even look for it. It came to me, right? Because somebody I'd met, I told him some stuff and it worked out great for him, luckily. And then like, hey, this guy over here does this rent by room thing, and somebody was in trouble with the property, and then it just came together, and it was nice.
That's great. Wow.
That old saying, "Your network is your net worth," is freaking 100% true. I thought it was kind of cliche, and I'm like, whatever. No, dude, that's true. It like being in these groups and talking to people, and listening to Jim and getting to know Dion and actually Matt, the lumberjack, he did me a solid with the accounting situation I had, and that was pretty cool. So that network thing is pretty powerful.
Did you use his guy for the cost seg? Gotcha.
Well, no, I did the DIY cost seg because I'm cheap. I didn't want to use I know Zuber uses David, or no, Michael Weiner, I think his name is, but he was like $3,300 a property, and I did a lot of research on this, and there's very little audit. I'm worried about audits, and very little audits in like the last 10 years where the cost segger bonus was the trigger. Usually it's something else. And then if they're going to dig in, they're going to dig on everything. And then that'll be an issue. Right. So I didn't even bother with the insurance this time around on the DIY cost seg. I used cost seg easy before because that's what Sam Wiegert's been using for 15 years or whatever. And that was fine. Same cost. But because the new EA that I'm moving to recommended that, and so did Matt, I used it, and it was a little bit easier to do. And the report came out, and it was like 20 grand more. I don't know if it's good or bad, but I left money on the table. I think in 2024's tax, or 2023 tax year, 2023 did in 2024. I think I left about 20 grand on the table, but whatever, live and learn. Sorry, we're throwing a lot of stuff out there for some people. They're like, what's a cost seg? What's a bonus? There's
Yeah.
tax strategies and different things, and it's a way to pull money, pull your tax breaks forward to leverage to then buy more property, yada yada. It's a whole thing. So
How's your the new house? You getting anybody in there yet, or?
I'm an idiot, guys. I gotta admit something here. Not really anything to do with real estate. Had to do with me being. Here's the difference. Like the first three houses I brought online when I didn't have a job. Now I'm back in a W-2. Time's consumed. I'm in a high profile job and it sucks all my time. And I didn't plan properly. I bought the house. I got the construction kicked off, but I can't get down there because I didn't do the real ID thing and I refused to do it. So I'm waiting on a passport. And not only that, I do have a handyman there. I did all the stuff, and I have a handyman there now redoing some of the little stuff. So I'm not wasting time, but I'm definitely I could have been up and running here by the end of this month, but because I didn't plan properly, bad me, I'm gonna have to pay an extra mortgage or two that I hadn't really necessarily planned for. I mean, I did, but worst case, and I was thinking, that's worst case. But now actually that's happening because I failed to plan properly, and it is what it is. So I'm trying to mitigate as best I can. I did rush it and all this crap, but the passport should be here in like I'm hoping 2 weeks, and then I can get my happy. I thought about driving down there too, but anyways,
That's
I
a long
screwed up.
drive.
Yeah, I've done that drive several times. I can do it in 24 hours, but I don't want to drive there and then have to drive back. So I don't know, man. I kind of screwed up there. So it's going to be about a $5,000 mistake, which sucks, but hey, it is what it is. And this month we're on a kind of a downtrend. We're at 78% occupancy, which sucks. But we've been close. We've been bouncing off the rev limiter for the last three. So we've been taking advantage of the high incomes, right? So for my strategy, the top, 80% to 100% occupancy is where all the profits at for me. And so I try to keep it high, and it has been artificially high actually. But now a whole bunch of supply has come on in my area, and so people are kind of moving around. It's like shit, but it is what it is. You got to That's the thing. You got to have reserves, like Steven. Like
Yeah.
if you jump into a house and you have no reserves, and then a water heater goes out or whatever, you're kind of screwed if you can't cover those costs. So in my situation, I can cover the costs and all this. So I've mitigated all that, but it still sucks, you know. So
Yeah, have you done buy box, rent box, all that type of stuff?
Sorry, what'd you say there, Jim? I couldn't
You've
hear you.
done buy box, rent box, all of that?
Like, did I make myself a buy box for
Yeah.
myself? Yeah, I have, but like you said, it goes back to like where's analysis paralysis, where it's like I'm switching from different markets, so it's like, oh, this market is the median sales price is 150,000, and then I switch over to Columbus, where it's like 200, 300,000. So I am ultimately like around like that $200,000, and I'm trying to find a market that can kind of fit that B class home within that market. So I'm still stuck right now, but within that $200,000 area with a 3 bed, 1 bath. Preferably, I would like a 3 bed, 2 bath, but 3 bed, 1 bath minimum. So
Yeah.
yeah.
So my biggest thing is I'm trying to find a market that I can ride off others' coattails because I do not have time right now to go find all those team members. So
Yeah.
I'm looking at markets that already have investors through this group that are already working in,
Nice.
and that's my prime focus.
Nice.
'Cause I do actually one of my goals is to try to get at least one out of state property going before the end of the year, which means I need to get a house locked in by August because I don't want to be stuck through winter. Which one thing that Jared was just talking about planning. You got to make sure something because in the areas I'm looking, if you get into November, December, you're in trouble
Yeah.
because that means you're going to live through the whole winter with nobody in the place.
Mm.
So you're eating that monthly rent.
Yeah, I'm guessing the best thing is making sure you renew that tenant in the summertime months, hey? Yeah.
Yes, yeah. Most of those areas, it's a spring. It's usually a spring rent season, from the research I've been doing. But yeah, so you definitely don't on Dion strategy in the wintertime. That doesn't work in cold climate. California, no problem. You can rent whenever you want. Same Arizona, all those places. Yeah, it's no problem. But it's cold. They don't want to move.
it's the
Don't
opposite in Arizona. Nobody wants to move in the summer because it's
Yeah,
like
it's too hot. Yeah,
120 degrees. Nobody wants to move anything in that.
yeah. They want to sit in their air conditioning.
Yep.
Do you guys look at weather as like a metric for out of state investing, or is it just wherever it makes sense?
I look at it for what we just talked about.
Yeah.
I got to get that property done by October. If it's not done by October, I'm waiting until next year.
Oh wow.
Yeah, definitely. I do. I want that online, ready to rent by October, and I will probably lower my rent for that first time to make sure somebody's in by November,
Mm.
just to make sure that I have it rented. Otherwise, I'm going to eat 2, 3, 4 months rent. Now, the areas I'm looking are not that bad. So, and I also don't want to reduce, like you were talking about quality of tenant. Jared was talking about that earlier. I don't want to make sure I have a decent tenant too. But I'm also looking at Section 8 and trying to figure that out. And there's a whole lot of stuff you just got to work.
Yeah. Would I I saw this topic, I think it was on like the Bigger Pockets forum or something. It's like where it's like you have your property manager, but then you also hire like a handyman on the side, someone who can you can call personally yourself that can kind of go over there for less cost. Obviously, with you want to kind of mitigate as much cost as you can. Would that be something that you guys have done or would recommend or anything like that?
I
I don't know.
do. I've got two handymen, and I've got multiple for every service. I've got at least two. Well, take that back. I've only got one electrician, but electricians are hard to find, man. I don't know, but anyway, in general, I try to have more than one.
Oh, nice. Okay.
Yeah, you should have multiples because if there's an emergency, because there's certain rules, especially in colder climates, that you can only have the heat. I think it's 24 hours. If you don't have, if the heat breaks down, it has to be back on in 24 hours, or you have to put them in a hotel.
Oh yeah, and then Arizona, I have four AC guys, so it's the opposite in Arizona. You got to
Yeah.
have air conditioning in the summer, and and I overpay a little bit. You know, whatever they, I don't not gonna say whatever they ask, but I do get a decent deal. But I do make sure that they're happy, and I pay instantly on all my service providers. That way, they take my call. Um, it's a relationship thing. So I like the handyman, same thing. You know, I'll do the Dion thing and tip and all that. So when I have an emergency, especially being an out-of-state investor, I'm not local. I'm in Oregon and my property's in Arizona.
Mhm.
I need them to help me, right? And take that call. And so if you have that good relationship and they know that, hey, that guy's gonna take care of me, they're gonna take care of me and I'm taking care of them. It's a good relationship.
It's one of the things I'm looking at in each of the areas is making sure that, hey, if I had to, I can go work on my own house. If I have to fly out there, because I won't wait too long. It's not going to take 6 months.
Yeah.
If it takes more than 3 months, I'm flying out and I'm going to bring one of my guys out. We're going to get it done.
Yeah.
I don't have that kind of patience. So I'm trying to make sure the areas I'm looking into, the laws work to where an owner builder can go do the work on the property, all of it, because I can do everything. I can do electrical, plumbing, drywall, tile, whatever. So I want to be able to be able to do my own work. In certain jurisdictions, plumbers, HVAC, and electricians can't. You have to be licensed even if it's on your own property. I don't want to deal with that because I can do all those things same as any of those other people. But I'm a general contractor in California. So in California, I have to do 3 trades per job.
Well,
For me, that's easy.
that's yeah.
Yeah, so like I'm right now, either Gary or Pittsburgh, I can fly out there for $300,
Yeah.
and then stay in an Airbnb for $100 a night. Me and one other person, we'll crank that thing out in a month. Yeah,
Wow.
it'll take some time away from my remodeling, but I don't care. I'll have some stuff. Oh, I'll get some stuff scheduled and do some Zoom meetings and stuff like that, which is one of the things I'm trying to navigate right now. I'm trying to figure out how I'm going to do all this, and that's the hard part. Like you're talking about analysis paralysis, is trying to figure out how to navigate what I'm doing now. If I can switch over straight to investing, and that's all I was worried about, it'd be a lot freaking easier. It
You're
would save a ton of time.
oh man. Yeah, wow. You're a hustler, Jim. You're definitely gonna get all those properties within the
Yeah.
short time. If you're flying out there doing it yourself, man, that's incredible. Wow.
Well, it's just if I can get all that done and do that, it's just going to get everything done faster.
Yeah.
And then and the biggest thing is it's going to be done the way I want it done.
Yeah.
And I don't have to worry about it. 'Cause one big concern I have is because I've already been through not really court cases, but I've seen stuff happen. I've been a contractor for so many years, I'm considered an expert. If something happened in one of my properties, well, you're an expert. You should have known better.
Yeah.
So if that happened, I've got to make sure everything's on board. So even if I'm not managing the whole thing, I'm going to have certain videos taken of everything before the walls are closed up and all that, so I can see it and make sure it's all the way I would need it to be done.
Jim, I know you said you've been in the business for like 30 years as a contractor, right? Yeah.
I've been a contractor for 30 years. I've been in the industry for 37.
Yeah. Like how like I feel like you've seen a lot of people come in the business and they're bad contractors and whatnot. How would you be able to give me advice on finding someone who's like kind of trustworthy or whatnot?
Local boots on the ground, your real estate agents and stuff like that, and then you're going to have to vet them.
Yeah.
Even the people they're using, they're using them for a reason, but they're all busy, and it's hard to find them because they're not. Even I'm just as bad. I'll go do a look at a job and I can't get to it, and I forget about it because I got so much else going on.
Yeah.
Communication is tough. It's
Yeah.
really
Oh,
tough.
So I'm actually reading this book by David Green. It's called Long Distance Real Estate Investing, and he has a unique strategy on like working with new contractors. It's like this system where it's like phase one, you give the contractor a certain amount of money until that phase is done within the certain period of time, and then you start the phase two, and then you pay that person for the phase
Oh,
two.
absolutely. You have gear marks. The easiest way to do that is inspections. So
Okay.
you have a so they come in and they do demo. So at demo you get a certain amount of money. Then
Okay.
at rough inspection, which is rough electrical, rough plumbing, and rough framing if you have any. There's another inspection. If you're doing a roof, you get money once the roof is done. So you have gear points where you get your money back. And heard all those books.
Yeah.
But there's certain things I don't agree with. I do to a point.
Yeah.
Give the contractors their money. They're going to, if they're going to buy the material, they're doing it for two reasons. Yes, they're making a little bit on that money on that stuff, but they're doing it for production and for time savings. I don't
Yeah.
want somebody going picking up something and not give me the right thing. That wastes my time. Now
Yeah.
you brought that stuff here. Well, you just killed my day.
Yeah.
So I've got to go redeploy and go do something else because I don't have the material.
Yeah.
So I've been meaning to put a comment on David Green's channel because of that. But yeah, I'm everyone needs to make money. Otherwise, why are they doing it?
Yeah.
Bottom line. Now, some people are, and I do agree with what a lot of people say. I'm slammed right now. Any price you're going to get from me on the remodel end, it's going to be way up there. It's going to be 15-20% more
Yeah.
because I got too much going on and everybody I know does. So your price is going to be way more. So try to do your work when it's not as busy
Yeah.
in that winter time if you can get away with it.
But, like, say if I'm doing a burn, I'm doing like a whole remodel. Like the best time to, because I'm a new investor. Say the best time to reach a good contractor is, you like.
Depends on the area. Area specific.
Oh,
Absolutely area specific.
okay, for sure.
Obviously, in a winter area is going to be tougher for them to do work, so it's going to be more expensive. My area, I haven't been slow for 4 years. I
Yeah.
went through COVID and I wasn't slow.
Okay.
So yeah, it depends on the contractors.
Yeah, for sure.
I honestly, I haven't looked for, actually, I take that back. I just looked for an appliance repair person. Oh, and they were like night and day in different costs. And then they didn't, something's so wrong with it. But yeah, we're all flawed. Everybody is.
Yeah.
So, I mean, just what the big easiest thing is you're texting them, emailing them, say, hey, just text me back. I just need to know how much time you need or if you can do this. That's
Mhm.
the simple answer.
Yeah.
So I'm getting the same thing. I'm trying to look in these areas. I'm trying to things. I'm not getting a response back either. That's why I'm starting to look towards the gearing up the point where I'm going to start doing it myself. Once I get once I get my projects done and stabilized, then I'm going to start really looking into it.
Yeah,
So,
for sure.
but I am still. I've got some other phone calls to make locally. If I can make California work, I'll just stay here.
Mhm.
Because why not say where I get boots on the ground? That just makes sense.
That's true.
But there is limited availability here for sure.
Yeah.
So,
Yeah. Same situation. Yeah, where Calgary is just appreciating through the roof. It's just, yeah, just finding something that makes work, that works or even breaks even is almost, yeah, limited. Yeah.
well, you don't have long-term debt there.
No.
Not
No.
with banks, but private, seller
Oh, so
finance.
they have the similar to the convoys and the lending ones and stuff like that.
Well, I mean, I'm talking like on the private, like if somebody owns a property outright, you might be able to potentially good luck with
Oh,
that.
seller finance.
Yeah,
Gotcha.
seller finance, those type of things.
Yeah, we still have seller finance and all that good stuff down here. Yeah. It's just the one thing is I can't if I make an LLC, there's a big tax implication because Canada, we don't have LLCs over here. If I try to buy a property and I buy it underneath the LLC, and then at the end of the year I gotta file taxes, uh, Canada doesn't recognize it. They're like, you gotta pay tax down in the States and pay tax up in Canada too. So I
Yeah, I was
gotta,
gonna say I'm curious how that's gonna work. Are you gonna pay double taxes? Are you gonna pay taxes in the U.S. and are you gonna pay in?
yeah,
Yeah, that's interesting. I'll be interested to find out how that works.
So I actually reached out to a cross-border tax accountant, and she told me that there's either two options. I can either go personal and or go the LPGP, which is the limited and the general partner route, because they're both recognizable in both countries. But yeah, there's no double taxation other than if you go down the LLC route, right? So, which I talked to a fellow Canadians, and they've gone down that route, and they said that they've been double taxed and don't go down LLC. But other than that, it's not as hard as I first made it seem, but it's yeah, I can't do 1031 exchanges, anything like that, but everything else I can pretty much do. Yeah, I can't have the Freddie or Fannie uh that you guys get down there. So, but yeah.
A partnership
Any
though.
income you would make would actually go off of Canadian tax, so you don't get any of the benefits that we get here, the cost seg and all that stuff.
I'm not too familiar with that. I haven't taken a look too much down there, but basically, if I do file taxes down there, I take that credit and I bring it up to what they say is like a tax credit. And I bring it up to Canada to my accountant here, and she does her thing, and then yeah, I don't pay tax up here for if I already paid tax down in the States, right? So
Gotcha.
yeah, but yeah, no, definitely definitely excited to get my first rental, but it's definitely a process. I've been doing research for 5 months, and I'm just still spiraling and just making sure I do the right move. And it's, but yeah,
You
no.
should leverage the Skool community and like whatever you're trying to do. See who's doing that and just see if you can ride their coattails. You know, I did that for underwriting. I,
Mhm.
it, I had a weird strategy, but I talked to a couple co-living investors, said, hey, underwriting this is weird. This is what I'm doing. Am I on track? I'm like, no, dude, you got it, this, and this. And so you learn before you even do anything, at least with the underwriting piece and several other things, you can get with somebody who's already been doing it for a while and learn
Mhm.
from them, right? So I'd reach out, leverage Skool, leverage Facebook, leverage all the different communities you're in, and
Yeah,
find out from other people. You know,
yeah, for sure, most definitely. I'm not sure if there's any Canadian investors in here that have you guys met any other Canadian investors in this group, or is it
Go on School and ask that question.
that's
yeah.
true?
And
Yeah.
I've got a decent sized player that's Canadian based. I can put you in touch with too if you zip me an email. And matter of fact, she's the one that I did the credit thing for.
Oh, really?
Yeah,
Nice.
yeah. She's doing co-living, but a little. She's doing the Golden Girls thing, like the higher echelon. It's
Yeah,
interesting what she's doing. Yeah.
man. I heard co-living is what's the new thing right now, man. I've been seeing it all over the podcasts and whatnot. Yeah.
Yeah, it's the new hot thing, but you know, be careful. It's not all. I mean, yeah, the cash flow is great and all that, but Matt the lumberjack calls it the BS to ROI, the bullshit to income ratio.
Yeah, yeah.
You know, so like long-term rentals, if you're a long-term rental person and then you look at, you know, co-living, you might be like, you know, whereas all I've ever done is co-living, so it's all I ever know. And I see all the cash flow and I've
Yeah.
mitigated my time on it as best I can. I I pissed off somebody last night because I was a little too stern in my vetting process. She goes, you know what, this isn't for me. And I think that's fantastic. Like I am down to 78%, but I don't compromise on the people side. Like when I purchase property, it has to be a certain property, people have to be a certain thing, and if it doesn't fit, it doesn't fit. But anyway, back to the what we're just talking about. Shit, I lost my train of thought. You were saying something, and I was going down a rabbit hole and got myself off track.
The Canadian investor
Oh
that's
yeah, I'll put you in touch if you zip me an email, and I'll put you guys in. She's great too. She's old and she's very feisty, but you know you got to like
okay.
yeah,
I'm a barber, so
she's
I work.
great though.
Yeah, I used to be at a salon. I used to work with feisty ladies all the time, and at the end of the day, they're smiling walking out the shop. So everyone's uh everyone's having a good time. But yeah, no, I sent my email underneath that chat there. I would love to yeah talk to her. What's her name, by the way?
Effie.
Effie. Nice.
Yeah, she has a YouTube channel called What the Effie.
What the-
That's awesome.
Yeah, she doesn't play around. She's like one of these old ladies that you just know not to mess with her. Like, you know, you just, but she's great. She really is. Here, I'll send you an email right now.
Going back to co-living, I thought as I was just thinking like since people are living with each other, I'm figuring like people are probably trying to keep the house like intact, like no one's like breaking the walls or anything. I feel like everybody's just like contributing into keeping the house kind of like clean and nice and just sustainable, I'm thinking.
That's the goal, but you've got a percentage of people that don't know what clean means. And so I
Yeah.
stress that up front. And that's
Yeah.
why a lot of people don't come on board. It's also why I'm at 78% right now instead of 100, because I've turned down the last 4 in the last week and a half, but it's absolutely not worth it. You bring in a dirt bag, or you bring in someone that's sketchy, you can actually tank the rest of the people there, and it pisses them off too. You don't want to have somebody in there that's going to disrupt the flow or the vibe, if you will, right?
Mhm. Yeah, for sure.
So,
Yeah.
Jared, do you have an exit strategy if laws change, if more competition comes in?
Yeah, we've already got more competition coming in droves. It's insane. But yeah, I do have some backup plans. Like if I absolutely needed to, I could do the sober living, and they can't stop that because it went to the Supreme Court and they're considered a protected class. Doesn't make as much, but I'd keep the property and make like 20% after, or maybe 15. Or, I'm sorry, over long-term rent. So it's actually decrease in my potential cash flow or my cash flow, but over long-term rents, it's an increase. So there's that. But also, if things get really crazy, I didn't do anything too major to the house. So I know a lot of the people that are doing co-living, they'll add second kitchens and go to the garage and all this crazy stuff. I don't do any of that. I just simply add walls, right? And so if I absolutely needed to, I could tear the walls down. And I've set the debt structure up as such that it will break even maybe a couple $100 on long-term rental, but I don't want to do that. But I'm taking a page out of Grant Cardone's and some of the other, like Cody Davis follows him, says how do I obtain properties and never lose them, right? Because that's the thing, is holding for long term. You got to make sure your debt is set up in such a way that you're not going to take a bath or have to sell something if something goes sideways, right? But I'm a pretty firm believer in that. Affordable housing is tough right now, and so that's the reason I originally had looked into the traveling nurses. But there's some issues there and blah blah blah. So I decided to deviate away from that and go with this co-living in a city where all the numbers worked, and they actually are landlord friendly, and they want this, right? The municipalities aren't fighting you on it in general, unless you're in Mesa, because they need this. There's homeless is just going up and up and up and up, and so if they want to stay in office, they're going to have to take care of the public. So that's why I think this is a decent strategy for me anyway.
Well, I mean, it's been around forever. You've had all the co-living and stuff for schools and everything forever.
Yeah, it's been around. I mean, even about 20 years or so, it's been on the stock market. A lot of the underlying assets are in this space, so it's nothing new.
Right.
That the only reason it's kind of taken hold is because you got a company out there that finally at least attempted to do it right. There's been several companies that try to take advantage of this and platform-tize it. I know that's not a word, but create an environment so it makes it easier to people come on board. But what they did was they tried too much. They tried to do all of it to where someone just put the money in, and they all failed. Where PadSplit, which is the one that kind of has pushed a lot of this, they're a couple $100 million company now. They focused on just the software, just the member acquisition, and just the structure. They don't do any of the maintenance on the properties or anything. They reduced they did the focus thing, fixate on one course until successful. That's what they did. They saw the errors of everybody else, jumped on board and just niched it. And, it's okay. But they recently changed their fee structure, pissed me off. So now I'm doing this one on my own. But anyway, that's a different topic. But yeah, it's been around forever, and it's a good strategy for cash flow, but it does take time and effort, and you got to have your systems in place more so than I'd say a long-term rental. And a lot of people actually will say, me included, like if you're going to spend money and buy an asset, like in my case, they're $500,000 or so, and you put a long-term rental in there, you make a couple $100 a month, great, if you can even find that, and you don't see your property for a year, right? Who knows what's happening to that property? With this strategy, not only do I get more cash flow, but I can keep tabs on this thing every day if I want to. I mean, for those that don't know, I have cameras in the common areas, which I know is weird, but it keeps the honest people honest, right? That's basically what it is. I think I've looked at a total like 4 times in the whole time I've had it, just because someone misplaced something or somebody drank somebody's Sprite, and I had to go find out who it was, and they, stupid shit like that. But I can keep tabs on my asset. I maintain it more. More people are going to give me information like, hey, the refrigerator's not doing too well, or the hot water heater's not, that kind of thing. Whereas if you have a long-term rental, and then the other thing too is like, let's say you have that couple $100 a month and you have something go out, boom, your whole profit's gone for the year. Whereas, I'm making what, 2K net on average, or more than that actually, per house, right? So 2K net versus a couple hundred, dude, for my goal, cash flow, I'm there, even with all the BS. So that's why I'm doing it.
Mm-hmm. Yeah.
Yeah, the places where I'd want to try it in Sacramento, it would cost me $1 million. And I just don't see that doing it.
Yeah, doesn't fit. And the only reason, like, this type of strategy would probably be better in, say, in Atlanta or even some Florida markets and things like that, where the acquisition cost is cheaper. But for me, my goals, this is back to the goal thing, taxes are a big part of my goal. I want to mitigate my tax burden as much as I can. Therefore, otherwise, I could retire tomorrow if I went and bought a whole bunch of houses in Columbus and just had the cash flow that would maybe not appreciate or whatever. But buying $500,000 houses gives me a huge tax advantage. And so therefore I can write off a lot of my tax burden by doing it this way.
Have you ever thought about targeting the college areas?
I did for a hot minute, and unless it's post grad, I don't want any part of that. Like, that's why I don't buy in Tempe. I don't buy in Tempe for that reason, and I don't buy in Mesa because Mesa is one of the areas. So this is about knowing your local market. I won't buy a house in Mesa for co-living because of the whole NIMBY thing. A lot of the neighborhoods in Mesa, even though they're C plus B minus, they think they're the Ritz and they're A class or whatever. And so a lot of times those properties there, although they'll work for co-living, the neighbors will bitch and moan and go to the county. And so far that county's proven to be a pain in the ass. Now, legally, they've beat all of the court cases, but I don't want to deal with that crap. You know what I mean? I do not want to, even if they beat it, you're going to spend legal costs, all that. I don't need the headache. So I just do not buy in Mesa, like, whatsoever. And that's where the networking, your power of your, that your network is your net worth. Like, I've talked to a lot of those investors in that area, and they're all having issues. So I'm like, staying the hell away from there.
I gotta go to church pretty soon here, so I gotta head out.
All right, Steven.
Jim and everybody, it was so great talking to you guys, and I'll definitely be back next week. And yeah,
cool. Reach out in the Skool community, man, and then reply to that email and let me know, hey, what you're looking for, and I'll put you in touch with Effie, and she's great.
For sure.
She's busy though, so don't take offense if she's going to say, hey, I can't talk to you for like 3 weeks to a month, because getting her time is ridiculous. Like,
Yeah. No, 100%. I totally understand. And yeah, no, thanks again for connecting me with Effie. I'll definitely reach out to her if she can have time. But anyways, guys, take care.
All right. See you, Steven.
Yeah.
Man, Jim, we kind of dominated that conversation. I feel bad. We kind of just went off there.
One thing I've noticed though, because I've been on the other end of it, listening to it, everyone's getting value of it.
Okay.
From the conversation. At least I think they are.
I hope so, man. I'm trying to add value. A lot of people have dropped off, so I don't know. But does anybody have anything to pop in there? I know. Sorry, guys, we kind of went off on this one. That was weird.
Yeah, Kevin has a question on some remodel.
Oh, go for it, Jim.
Yeah, I have a it was that property I'd mentioned prior, Jared, where it's been sitting on the market for a little bit. But Jim, I had some thought, or I'd like to know your thoughts on how much maybe this would cost from a contractor. If you'd like to take a look at it, I can share some photos maybe.
Yeah, that's fine.
Cool. Let me it'll take me a second to upload a couple of them, but yeah, maybe you guys can continue to talk. Let me try to dig through my photos.
Is it on market?
It's on market.
Do you have a link to the actual address?
Yes, actually. Do you want to, Jared, do you mind pausing the recording for a second?
Yeah, let me do that. 1 second here. Okay. All right. I'm
actually,
just gonna go ahead and end. All right. See you, boys and girls. We're going to end it and talk personal stuff.
All